Prime Minister Narendra Modi recently issued a highly unusual set of directives to the Indian public. He asked citizens to halt unnecessary gold purchases for an entire year, cancel their foreign trips, and start working from home. India holds a deep, centuries-old cultural reverence for gold, historically making it the absolute default vehicle for generational wealth. For the leader of the nation to actively demand that citizens stop buying it suggests a severe economic anomaly is unfolding. Within hours of the speech, major jewelry stocks like Titan, Kalyan, and Senko saw their valuations plummet, erasing billions in market cap. This high-velocity sell-off indicates institutional investors are pricing in a systemic threat, anticipating aggressive government intervention. The focus on gold and fuel suggests that the primary drivers of this crisis aren't found within India's borders, but rather they are part of a larger set of massive external global pressures beginning to squeeze the national economy. That pressure traces back to the Middle East. Escalating regional tensions and the threat of a wider conflict involving Iran have introduced severe uncertainty into global energy markets. The direct result of that instability is a heavy, sustained jump in the global price of crude oil per barrel. India heavily relies on foreign crude to power its infrastructure. When barrel prices spike, the national import bill, the total cost to bring in necessary foreign goods, rises to unsustainable levels. Because international energy trade operates primarily on the US dollar, India must liquidate its own foreign exchange reserves to cover this inflated oil bill. As those foreign reserves drain out of the national accounts, the domestic currency loses its backing. Consequently, the value of the Indian rupee has dropped to record low levels. The Indian economy is currently losing capital at a rapid rate simply to maintain its baseline energy requirements. At the exact same time, global financial markets are reacting to the same Middle Eastern instability. Investors are moving their capital away from volatile stocks and into safe haven assets. That intense global demand is pushing international gold prices to record highs. Indian households are mirroring this behavior. To protect their personal wealth from a weakening rupee, citizens are aggressively buying up this record-high gold. This creates a structural conflict. Because India imports virtually all its gold, these purchases create a second massive drain on foreign exchange reserves, already depleted by the oil shock. By buying a personal safety net, citizens actively weaken the national currency. Household gold purchases have evolved into a direct threat to the security of the broader macroeconomy. This double bleed of foreign reserves is why the Prime Minister intervened, attempting to stop the outflow of capital. The crash in jewelry stocks happened because investors understand that governments facing a currency crisis often move beyond requests to enforce direct economic action. The market expects a severe hike in gold import duties, a move designed to physically price consumers out of the market to protect the national accounts. These fears are already extending to the energy sector, fueled by reports that strict new fuel conservation mandates are being prepared. The market crash reflects a harsh reality. The government may be forced to kill consumer demand to save the rupee. Opposition parties are highlighting the Prime Minister's statements as evidence that the national economy is facing severe, unmanageable pressure. Breaking reports confirm that government officials are already drawing up aggressive new measures to throttle total national imports. In the current global climate, gold and fuel function as national macroeconomic levers, their consumption tied directly to state stability. The daily consumption habits of 1.4 billion people are now a primary factor in the survival of the national currency. The immediate question is whether Indian citizens will voluntarily change their financial behavior, or if a wave of heavy government regulation